right, welcome back to Rand on Real Estate. This is Greg Rand, your host on 77 WABC and WABCRadio.com. My website is ownamerica.com. My book is called Crash Boom. Go and get it. It's going to change your life. I'm not overpromising there, am I? I don't think so. If you buy one piece of real estate as a result of that book, it will change your life. You're going to have to wait for the change, maybe 10 years, but it'll be a wonderful day when you wind up taking that money out. Let me get to one last call before we go to our final expert. Barry from Long Island. How are you, Barry?
I'm doing great. How about yourself?
I'm doing great, too. Thank you for holding on. What do you have in mind?
Well, I sold my house 2 years ago, and I have money. And what I've been doing with it is buying real estate out of state and selling it. My brother's a realtor. We bought it at auction, and we're selling it. But I've not really made much money. I made $8,000 on two, and I'm just about to make $5,000 on another. And I have a high rent, so I'm not really sure what the right thing to do with my money is.
Well, let me ask you a question. Where out of state have you been buying?
In Colorado.
In Colorado. Now, you asked a couple of good questions. One of them is that when you go out of state, being around New York, the prices here are pretty darn high, about as high as they get. And so it isn't as easy, to come up with the down payment to buy property here because it takes a lot to put a healthy down payment down on expensive real estate. And the rents don't always keep up with the prices. They're getting closer now that the prices have been coming down. But if you look around, you see places like Florida where the migration patterns are driving millions of people down there for the retirement and so forth. And there's jobs going down there. The Carolinas, Texas, Colorado. There are places that are growing faster than New York, and the price points are lower. But, of course, what that means is that you have to hire somebody to manage your property if you're going to hold it. And that sounds like the kind of the decision point that you're at. You've been buying and flipping.
Yes, and now I'm looking at buying and holding.
And what that means is that you have to factor in something around 4 or 5% of your rent is going to go towards paying a property manager. And
actually, I thought it was higher than that.
It depends on where you are, but try to sharpen your pencil on that and find people that are going to handle the leasing for you, so they get a commission on the leasing, which is in their some money in their pocket, and try to get somebody reliable. Check the references because you're going to be out of state. You need somebody who's going to treat this thing like an important piece of real estate that they're going to keep their eye on. But the bottom line is that you said something really important. I mentioned at the beginning of the show, I'm going to teach people 3 things today. One of them that I've touched on a few times is that you don't get rich buying and flipping. You make a score here, you make a score there, but all it takes, if you make an $8,000 on this and $12,000 on that, all it takes is to buy a property and find out you didn't notice the roof was damaged or the boiler was screwed up, to have all that stuff go sideways. And all of a sudden now you might do 3 or 4 good deals in a row and amass $20,000 or $30,000 or $40,000 in profits along the way, and then make one mistake and give it all back, or even worse, make one mistake and wind up stuck with a property you can't unload. So it doesn't take as much energy to buy and hold, which is a plus. But going out of state is okay if you don't mind going there now and then to check it out. And you pick a place, and Colorado is one of them that's on my top 10 list of places where the population is growing because the lifestyle is great. The places, it's a well-run state comparatively, and the population is young out there, right? So I don't think buying out of state's a bad thing as long as you understand there's a risk of being detached from the property, and you're going to put a lot of your eggs in somebody's basket who's going to watch that property for you. So, Barry, thank you very much.
Out there. What was that?
I'm sorry, I got to jump because we're going down to the bottom of the hour here. Thank you very much for the call. If you want to email me, come to ownamerica.com and shoot me an email. We can talk some more. Let me jump over to my second expert here who's going to teach us some things about his strategy, Pete Berman of the Ruby Group. How you doing, Pete?
Good, Greg. Good to talk to you today.
Same here, and thank you for holding through half the show here. I appreciate it. So, Pete, you do business up in the suburbs north of New York, but also in other places, right?
Absolutely. We do quite a reach depending on if it's ownership or just construction and development.
Okay, so you guys buy to hold, you build, you do all kinds of things. Tell me what you're doing right now. What about this opportunity today? I know you guys are on the move. How come?
Today's the opportunity to buy to build wealth. Like the other caller said, we do some flipping off of auctions, and that's a great way to earn a day's pay. But if you want to build wealth in real estate, like I've heard you say in the past, it's really through ownership. It's through appreciation and using cash flow to pay down the principal balance on the loan, the mortgage, and increase your ownership percentage. Right now, we see the great opportunities to buy, obviously here in the New York metro area because of the large job base, which is starting to return. We're even starting to look in Florida, which is a market we never entered before. And it's really because the strategy that drives us towards that area is when everybody else is looking away is when we want to look.
Right. Now, it's interesting. Florida, you mentioned Florida. The third thing that I said people were going to learn today is that what's happening today in the hardest hit markets, and I know you know this, Pete, the hardest hit markets around the country, which were Florida, Arizona, Nevada, California, and the fifth one is Michigan, but they're getting slammed for totally different reasons related to the auto industry. But those other four did overdevelopment, overspeculation, bad lending practices. They're in a firestorm of foreclosures right now. And it turns out that in those markets, the reports coming in for the fourth quarter and the first quarter are that half of the deals being done in some of those towns are all cash buyers. So you represent sort of the front edge of the spear of people that, you know, consumer confidence is going to follow investor confidence because consumers are trying to find a reason to not be afraid anymore. Investors are trying to find a reason to make a fortune or find an opportunity to make a fortune. So you're in that camp right now. You see Florida as a place you guys are going down and making aggressive offers?
Absolutely. We're also looking locally. You know, we look wherever everybody else doesn't want to be. We look for things that are value added. So our value added skills drive towards development, construction, and marketing. So we want properties that are in terrible condition.
Right.
Properties that maybe have some sort of zoning issue and it bogged down somebody else. And we do a lot of those deals by combining our skill set with the available capital. So we work with, you know, quite a number of individuals who have money and want to invest in real estate, but maybe they don't have the time because of their work schedule to commit to being a landlord. Or maybe they don't have those skills or they're concerned about the commitment. So we work with them where they just make a passive investment. You know, they look at all the fundamentals. They have all the financial benefits of ownership, including depreciation, appreciation, and cash flow, but they don't have the commitment and the obligation.
So that's interesting. So people, I'm glad you mentioned this because a lot of people say, okay, Greg, love it. I want to invest in real estate, but I don't want to be a landlord. And that always cracks me up because, you know, I use the old analogy, Laura gets sick of hearing it, of, you know, imagine somebody opens a restaurant and then they tell you that they can't stand people who won't cook for themselves. It's like, well, what do you know, you're in the wrong business. So if you don't want to be a landlord, but you present an opportunity for investors who don't want to be a landlord, who want to put their money in the hands of somebody who knows how to handle this stuff, and particularly because you know how to buy dilapidated pieces of junk that nobody wants, fix them up very efficiently with your own staff, and then market them quickly to either get them back in the market or get them leased out.
Absolutely. You know, and Greg, to the people that say that they don't want to be a landlord, the question is always, what investment do you make that you don't have to do anything and you still make money? People go, well, when you buy a stock. And you go, right. And from 2000 to 2010, every dollar you invested in the stock market was worth $1. Right. For every dollar you invested in real estate in 2010, residential real estate across the country, you were up 35%.
Wow.
35%.
You're right, yeah. People forget how to compare those two things.
So it's the worst possible economy for real estate was ending in 2010, and you still made an annualized return of 3.5%.
Yeah, that's beautiful. So those numbers are fantastic. Listen, I got to cut because we're going to a hard break at the end of the show here. Peter, we're going to have you back again to put more time into this because you've got a wealth of knowledge. Your website is rubygrp.com, correct?
Yep. Thanks a lot, Greg.
rubygrp.com. I appreciate it very much. Great information from Pete. Do I have time to take one more call?
If you can do a drive-by in 30 seconds for Sherry.
Okay, Sherry from Brooklyn, you've been hanging on. How you doing, Sherry?
Good, thank you.
So you have $200,000 to invest, and you want to know what the best way to use that money is.
Right. I'm thinking about using it in Florida, but I don't know if to go with an area like Boca Raton, which is very upscale area, and buy one property and rent it out, because I'm also looking at it as a retirement plan. Okay,
listen, I'm getting the evil eye over here from Laura. You know what? You should send me an email. Go to ownamerica.com because I don't want to give you a hasty answer. The good news is having $200,000 and having your eye on Florida means you are in a great position right now to be able to make a really good play. But I would like to not have to give you drive-by advice and actually give you some solid advice. But bottom line is you're coming into this thing at the right time with a healthy amount of capital and you have your eye in the right market. So a lot of good things going in your direction right now, Sherry. So please go to ownamerica.com, find my email address there, shoot me a note, and we'll talk offline. All right. Thank you very much. Sorry about dragging this one right to the very edge there, Laura.
I want you. I know you can do it, but you're so generous with your advice that I knew it would. We'd get right in the news. But anyway, so ownamerica.com.
Ownamerica.com. You can own a piece of America. It's the best investment ever invented. And my website. Oh, you already saw that. My book is Crash Boom. Get on there. We have free training programs on there for investors. We have training programs for real estate professionals who want to specialize in this. Thank you, Laura, so much for your help today.
Well.